Per usual, everything on this channel is for educational purposes only and is not intended as financial advice. It's Macro Monday. Let's take a look at some legacy charts. First, we'll take a quick look at the flows report from James at CoinShares for last week. Global flows were down considerably week over week. ETH saw a good inflow. Ripple saw a large inflow as well. I'd show you the breakdown, but that's not loading for me at the moment. But I imagine a lot of this is holiday related, at least in the US. The US is where most of the flows have been coming, especially through BTC. And we probably see decent activity in the first 2 weeks of December, and then the last 2 weeks of December. Activity flows-wise probably drops off globally just because everybody's celebrating other holidays and the new year. Looking at the annualized basis on BTC, it's back up to 15%. So that means it's getting juicier and juicier to come in and arb this away, shorting the future, longing the spot via ETF. So we may see flows related to that this week. Some flows last week for ETH may have also been ARB related and not necessarily net long positioning. You can see a big spike here on the 29th, 333 million. Most of that coming in through ETH-A, BlackRock. We did have some activity in the US government seized funds wallet. They moved around 20,000 BTC, 10,000 of which went to Coinbase. My assumption is always if these coins are moved, they're moved because they are being sold or have been sold. This could be some settlement procedure as far as the coins may have already been sold. We don't really know. But generally, when you see large coin movements from a government entity, it's not going to make the market happy. So we saw some down action on that today. Before we get any deeper into crypto charts, let me mention today's video sponsor, Kraken Pro. Kraken Pro is a complete overhaul of the Kraken trading experience with a one-stop shop for advanced and professional traders. Kraken Pro enables efficient trading execution across multiple markets with a UI that allows for unique optimization tailored to your trading style. You can check out Kraken Pro with the link in the description of this video. Not investment advice. Crypto trading involves risk of loss. Cryptocurrency services are provided to U.S. and U.S. territory customers by Paired Ventures Inc., PVI, DBA, Kraken. On the BTC chart, the current level that we really do not want to drop below, if you're long, is 90.5, 90.4, something around that. At that point, we will be tripping the Williams fractal stop loss below the Tenkin at 93. We will be tripping the Tenkin, the blue line, trailing stop loss. And if we do that, eventually we will hit the Kijun. Most likely, that's what it's telling you. It's a high probability of an attempt to reach the Kijun. Now we may get another trailing stop loss up here. If in the next 2 days we remain higher than the current daily low, we will get another trailing stop loss at 94 something, and that would make a lot more sense relative to the Tenkin. So we've got a little bit of time in the near term to try to keep this thing going. Certainly the rest of the month. You know, if we really want a December to remember, let's just say it. If we really want a December to remember, that's going to be above 99 would be the Williams fractal trigger on the long side. And you can see in March, we were just as overbought relative to the Kijun, and price went sideways, fell into the Kijun. It didn't immediately fall into the Kijun, so this is going to move up. This is just the mean reversion level over time, but none of that is screaming bullish continuation in the near term. Ripple again getting just insane volumes. Don't really know from where. It has to be retail, TikTok. It's certainly probably not mostly crypto people, not that I'd imagine. I have a chart on that in a second on the 2-year moving average multiplier. And everything else kind of just hemming and hawing here with BTC flailing a little bit. Something else to watch on BTC over the next couple days. We certainly do not want to creep back into the 4-hour cloud again. You know, we were setting up for this beautiful, amazing, awesome inverted head and shoulders, and the government comes in and says, well, watch this, you know. So it's looking less likely that this breaks out unless we have some buying step in to prevent us from testing 95 for the 4th time. So you definitely got to be careful there. There's also, you know, this alternative. Maybe this is just a giant flag, but again, breaking below 95, no bueno. So I'd love to see a good fight at that level. Here's the Ripple chart, 2-year moving average multiplier. The green line is the 2-year moving average. Below that line historically for some assets has been a decent accumulation zone. The white line is the midpoint, and the red line is 5 times the green line, 5 times the 2-year moving average. Again, for some assets, this is a great place to take some off the table. Depends on what it is. Can certainly go higher, but if you're looking for pie in the sky targets on Ripple and you're up 4x plus 5x at this point, certainly a decent spot to potentially take a little bit off, right? Now, of course, it can keep going. It can reconsolidate, keep going, but definitely be careful up here. As for the calendar, lots of Fed speak this week. They never run out of things to say, apparently. We have JOLTS on Tuesday. We have ADP employment on Wednesday. And then we've got unemployment on Friday. We'll take a look at that chart. And then next week, we've got CPI, PPI, and we, of course, will look at inflation today. Look at the Fed funds probabilities. We're still pricing in a 64% chance of a cut, despite what everybody on the macro side, the job owners on the macro side are all saying we shouldn't cut. And I think in order to flip this out of a probable cut, we would have to see unemployment rate tick down dramatically. So we'll see at the end of the week if that happens. That would be the one thing that could flip this the other way, because we are starting to see inflation back above 2%, back above 2.5%. Trueflation is actually higher than the current CPI, Trueflation being the more sensitive day-to-day real-time feed of inflation. And this is also matching expectations on the Fed's own nowcast at 2.7 for November, with 2 days into December, another rise in CPI. Core is headed in the right direction. PCE also elevated, core PCE down. So not the 2% target the Fed is looking for. Everyone's aware of that. That's why the macro talking heads are all saying unemployment is rising but low and inflation's a bigger deal. The Fed has signaled otherwise. They have signaled that they are looking to support the labor market. So if the labor market doesn't need to be supported, then I wouldn't expect a cut on the meeting in December 18th. As far as the yield curve, we've re-inverted on a lot of spots on the yield curve here. How this should look is from lower left to upper right. That's how yields in a normal environment would look. When you have yields higher on the short end than the long end, that is the uninversion that you're looking at. GDP, by the way, soaring at 3.2. So absolutely no recession in sight. Here's unemployment rates and the yield curve. Historically, what we've seen is everything all at once. The Fed has to start cutting because unemployment is rising. Then the yield curve uninverts and it's all too late and we get a recession. That would be like a crash landing, hard landing. We're currently still in the soft landing, still in the sky, Goldilocks area, 10.2 re-inverting. Probably not something most people were necessarily expecting. And then the yellow would be unemployment, currently at 4.1. And if that ticks down to 3.9 or something, that's probably enough for the Fed to say, okay, we can just hold here and see what happens. And I can't imagine risk markets are super happy with that, but it would signal that the economy is doing okay based on the Fed's estimates. Powell has said it is going to be a live meeting, which just means there's no guarantees one way or the other until they see the data. Now, if unemployment makes a new local high to like 4.3, 4.4, then I also don't think the markets are going to be super happy with that. And we do see a cut, I think, regardless. But now we're drifting into stagflation territory where we're not necessarily controlling inflation very well. And then we've got unemployment on this runaway path, spiking to wherever it ends up. So a lot of very, very tenuous stuff going on here. And oh, by the way, we have a new president coming in next month. This is the 10.3, which remains inverted. This is Cam Harvey's preferred recession metric. Cam Harvey was the first one who observed this correlation, let's say. So what he would tell you, my guess is, there's no risk here of recession because we still haven't uninverted on the 10-year 3-month curve. On the bond ETFs, the bond complex, nothing here is really jumping out at me. I mean, TLT maybe starts to keep turning around relative to some of this other stuff. Ag also looks okay. IEF is okay. Shy gave a lot back. All these look okay. They're not going to blow your socks off trend-wise. But we'll see in 2025, right? We don't know necessarily what we're going to get. We think we know what we're going to get. The market thinks it knows what it's going to get. but a lot of promises are made that aren't necessarily kept. So we'll see. And then the market starts to price in those actions from there. But across the board, this looks pretty neutral to me. I talked about dollar strength last night, and in the DXY, a predominant weighting on DXY is Euro USD. So if this chart, Euro USD, continues to fall, we will see DXY continue to rise. And this certainly doesn't look bullish here. You can say that much just on trend metrics, and it's effectively the opposite, the inverted DXY chart. So if you're in crypto, you do have to root for the euro here, which is a pretty tough ask because this does not look good in the near term. Even if you zoom in on this, still looks quite bearish. This is oil, which also looks bearish to me, has looked bearish for a very long time. I don't know if this gets below 50, but I wouldn't want to be long oil directly necessarily, especially if Besant wants more oil, more hydrocarbons pumped out of the ground. Gold also, maybe this is a peace dividend conversation, but gold also looks weak, continues to look weak to me. Daily bearish TK cross price in the cloud doesn't scream bullish continuation from here. It's got a diamond top versus head and shoulders. It doesn't need to pull back to 2400, but it's not for me here. What you'd want to see is what you saw in June, July, which would be a TK crisscross, price above cloud. That's the go signal based on the cloud, based on trend metrics, not here. So I like lower over higher on gold. Silver, the same thing. Definitely head and shoulders type fractal going on there with price below the cloud. Now it does have this multi-year inverted head and shoulders that it's tried to break out of. That target is like 50 something. You can see it drawn below there, the rightest most shoulder. But I would not expect anything super bullish in the near term. Real quick, back to Sol. This was one I talked about last night. Continues to look bearish to me. This is kind of similar to the gold chart, just a farther interpretation with more candles below the 4 hour, below the neckline. You just can't be bullish on this. As this is forming, I can't be bullish on this. We were at like 244 and I was like, okay, it's setting up for a potential head and shoulders. Doesn't mean it's an immediate short. It just means, yeah, I'm paying attention here because the downside is 200. It didn't make sense at the time, but that's how it played out. And it could stop here, right? But it's still not bullish. Certainly not bullish on the 4 hour. Uranium, the ETF, is one that you'd think would be more bullish. It does have a bit of a cup and handle situation here. I do like highs. If for whatever reason we have some fundamental narrative where we're pushing towards nuclear for AI, energy, right? It doesn't really matter what it is, but we can imagine a story where there's increased demand for uranium. Technicals look okay here. It's the weekly, so it's going to take some time, but this has held up nicely despite trying to break down. Onto the indices, they still look great. We can draw all sorts of rising wedges here. I'm sure there's bear divs on this. It looks fine. It just keeps moving higher. This is the SPY. Climb that wall of worry, and you can kind of see the difference between all of these Tenkan bounces throughout the years. This was 2023. Tenkan bounce, we broke down. That was kind of it. Tenkan bouncing a bunch, we broke down. That was kind of it for a minute. Tenkan bouncing, we broke down. It's been a little noisier up here, admittedly, but not bearish whatsoever. So higher we go. You're climbing the wall of worry, stairs up, elevator down. I get that entirely, but there's just no trend argument for bearishness here. Same thing with the Qs, a little noisier around the Tenkan, but generally it's been correct. And this is a new all-time high, I believe, for QQQ, thanks to SMCI pulling up and Intel pulling up today. IWM also near new all-time highs, also has some sort of cup and handle fractal. Trend metrics not bearish whatsoever. I don't see too many bears anymore necessarily. Maybe that's a warning sign in and of itself, but there's very little reason to be bearish here that I see. We can point to fundamentals and valuations. That's fine, I hear you. But the technicals don't look toppy in the slightest to me. All these indices look very, very bullish. Back to energy for a second. XLE failed to make a new high. Maybe it just does nothing. Maybe it breaks down. If you're an ascending triangle fan, just something to watch. Never a good sign when we are all the way at the end of the triangle. Never a good sign when we don't actually see continuation. And this could be potentially related to oil weakness. I don't know, right? We may see more M&A in the sector under Trump than under Biden. Cloud still says hang in there for the moment. SMH is another one. It's been very noisy. It slowed down a lot when it hit its cup and handle target. It's been trying to break down for a long time. Solana would be, again, farther along in its journey, breaking down than SMH is here. But I'd still want this above the right shoulder just to be sure, which is about 265, something like that. Just very choppy and very messy. And I look at the IGV chart and it's just no contest to me. This is where I'd rather be versus playing around with SMH. I didn't realize this, but IGV actually has MSTR and Palantir in it. Small percentages, but this is the software ETF. And it continues to look great. No issues with that one at all. As far as the Mag 7 are concerned, this is the Mag 7 ETF MAGS. And it just broke out and made a new all-time high. Nice little flag there. So not even seeing any weakness really on most of the Mag 7. I mean, they're okay, right? They're not as exciting as Apple maybe. I think I was bearish last week on this just because it was looking like it was going to bleed into the cloud. That didn't happen. This, again, ascending triangle. Sure, why not? Why not, right? And this will certainly help the indices push higher. Microsoft probably the most bearish of Mag 7. Tesla also looks great. Low time frame, ascending triangle. No issues there. The scary part for me on Tesla is, again, the 2-year moving average multiplier. If we look at what happened in 2019, similar fractal, where we have this Adam and Eve. We even had a little Adam and Eve back here in 2016. You could argue this multi-year Adam and Eve is setting up for a move potentially to 1,000. That would be the 2-year moving average multiplier target. So we'll see. We'll see where this is in 2025. Certainly doesn't look bearish based on a lot of metrics after it pulled up post-election. A few other individual names. This is ANF, Abercrombie & Fitch, and this has been trading pretty technically and consolidating for many, many months at this point. Trend Spider on X pointed this one out. He's a great follow. But on the cloud, we're starting to get above the daily cloud again. We've got all sorts of chart patterns here. We've got an inverted head and shoulders triple bottom type fractal. We've got a massive triangle here. Previously, you had a head and shoulders versus descending triangle. That broke down. Back here, you had a flag versus head and shoulders. That broke down. So to me, this looks great. This looks really good here. And it's definitely something on my watch list that I'm looking at now because it is above the weekly. Now, it may fail like it did in August, but it looks really good here, especially towards the very end of this triangle. And it kind of reminds me of Costco a little bit. Costco has a longer consolidation at the bottom here. And there's no promise that you get a 2x on ANF from here. But these bases can lead to just continuous markup over and over and over again. And you probably even have a flag at the very tippy top there on Costco. So I wonder if they're headed for a split here sometime soon. But this thing has just been a monster, regardless of valuation. And since April 2023, the cloud has largely told you to stay in. Just stay in, get in over and over and over again. At every time it's tried to break down in the cloud, it's told you to get back in, get back in, get back in. So with that in mind, this would not be an entry you'd want to miss if you're looking to trade something similar. At least, you're looking for that sort of setup. On the other end of the spectrum, this company, Stellantis, Chrysler, just continues to get hit with bad news after bad news. The CEO stepped down over the weekend. I think they just got awarded like a $7.5 billion contract from the government. I'm not trading this. I'm not telling anybody they should be trading this. But as a student of the cloud, it's always fun and interesting to paper trade some of this stuff and ask yourself, okay, where would I, in earnest, buy this? It does have a multi-week, multi-month bull div here on the high time frames. Previously, this bottomed out with kind of a diagonal triple bottom here. So I think it's a little too early, but it's definitely something interesting to watch based on the cloud. The divs say get ready for something in the near-ish term, eventually, right? How much more bad news is left? Again, I wouldn't trade this. I wouldn't touch this, but just from a paper trading perspective, very interesting to trade that one. Zoom is another one. It looks good. It is making its way through the cloud. Probably has a great 2025. At least it's setting up for that. And it spent multiple years below the cloud. So this will be the first time since 2020 that it is back above the weekly cloud. Peloton, similar situation. These are all, of course, COVID darlings. You had a head and shoulders at the top there, and it's been down only ever since. Maybe 2025 is Peloton's year. Maybe it gets acquired by somebody, Apple, I don't know, right? Maybe Zoom and somebody else merges in 2025. And that's how we get the fuel to push this higher. And then finally, PayPal is another one, along with Square, along with a few other fintech names that look like they're set up for a great 2025. Multiple years of down, followed by multiple months of consolidation. And now we're holding above the weekly cloud. So there's plenty of other stuff to consider. Schwab is another one. Square, I mentioned that already. Lots of stuff to consider and look at that isn't crypto in the meantime. If you're trying to force certain trades or are just looking for other stuff to do right now until BTC makes a decision, there's definitely other options. One last chart we'll look at is Link BTC. I mentioned this last night that on the 3-day, there was some high time frame cloud that it was just peaking above. Maybe it was the daily. Yeah, I guess it was. And you got a quick answer, right? This is the best you can hope for. You're getting the signal literally yesterday, and then today it's up like 20% relative to BTC. Sorry, 28%. So on the technical side, it's really less about the asset. I mean, the asset needs a story. It needs fuel. It needs tailwinds, just broadly. But a lot of what I do and look for is trend entries like ANF, like Link yesterday, or just try to avoid stuff like Solana on the 4-hour. That's all I got for this one. Like, dislike, comment, share, subscribe, and happy trading.